Insurance firms charge customers for things like home and motor insurance. The regulator's goal is to ensure that retail insurance providers deliver competitive and fair prices for customers. But how could technology help these companies comply with regulations and provide better value for customers? Joining us now is Balram Pal, Vice President and Regional Head of Tech Mahindra. Welcome to the show, Balram. Great to have you with us. So let's start with talking broadly about regulation in the insurance industry. It's been increasing over the years and become increasingly more challenging, hasn't it?
It has. So if you really look at, the way regulation has changed, you clearly have a couple of things which drive the insurance industry. There's obviously the regulatory pressure, which is increasing year by year, but you also have capital requirements, which means innovation and disruption has been very limited in this industry, right? So if you take the recent press, which was all about treat the customer fairly, the FCA has been really going after the insurance companies with a view saying that if you're a loyal customer, right, and typically when your insurance policy, whether it's home or motor, comes up for renewal, do you get a better deal than somebody who's completely new who goes for it, right? And that's not necessarily the case. So is it a classic case of you're not being treated fairly because you're a loyal customer? And I think it's opened up a can of worms. So you got regulation at one end, right? You got the cost of doing business, which is ever increasing as well. And effectively, how does one get out of that? And I think technology is the answer for that. That's the way we look at it, right?
Right. So how can insurance firms use technology then to sort of make sure that the cost of complying with all these regulations doesn't get out of hand and impact the bottom line?
Yeah. So if you take technology per se, most insurance companies have what we define or what we call as legacy, right? So these have been systems which have been there for 15, 20 years. At the end of the day, an insurance company makes money by putting its premiums up, right? So me and you pay for it. But I think it's become extremely competitive now because the regulatory side is driving cost pressures on them, right? Now, this is where technology can really come in. So if you look at things like artificial intelligence and blockchain and analytics which have come in over the years, right? These are things which can start automating a number of tasks which exist within the industry today, which is driven by manual labor at this point of time. If you take the industry itself, there are two parts to the industry. You got the assets and the liability. When I put money in, it goes into the assets for the insurance company. The liability element is the claims which happens, right? So when you claim money, that's a liability for the insurance company. And it's a case of how do you balance those books, right? If you look at the classical claims processing side, right, it's been very heavily call center, manual driven, right? Now, you've got technology which can actually make it zero touch because you can put in artificial intelligence, you can get bots who process that for you if it's a fair claim. And the only intervention or exception comes in when you think it's a fraudulent claim. And that's where artificial intelligence can say, this claim pattern looks very unusual, right? Or so-and-so has been making far too many claims over the years, right? That needs to be manually vetted and audited.
Yeah, the thing is, Balram, I mean, the insurance industry, when you think about it in the broader context of financial services, it's not usually seen as the most innovative, fast-moving of all the financial services industries. I mean, you yourself has described it as the dinosaur industry when it comes to technology. Do you get resistance from your clients, which are some of the big European insurance firms, in implementing this technology, or are they on board and find it easy to integrate?
No, I think they find it very difficult to buy into the technology element as well. Because it's people, right? At the end of the day, you've got people who've been in the industry for 30, 40 years. They're comfortable doing what they've been doing, right? Technology will disrupt the way things happen today. It will disrupt the processes which exist and which have existed for years together. So there is resistance at that end. At the top, if you really look at the management layer, they do want to make the difference because they know technology can enable and make it more profitable and help them control the costs. But it's how does that percolate all the way down? And that's where you see some of the challenges, right? Now, one of the sectors that we service is the London market, the Lloyd's market, right? They, as you know, they're the largest specialty and reinsurance market in the world, right? And last year, the gross written premiums was somewhere in the range of 33, 34 billion pounds. Now, if you look at that, and combine it with the fact that last year was also possibly the worst for them in terms of catastrophes, right? So they made loss as a consortium, right? Given that, technology could have actually enabled them in terms of controlling some of that, right? Because if you've got models which are artificial intelligence driven, that could actually help you in terms of predicting and deciding in terms of where do I place my risks. right?
Yes, got it. Balram Pal, thank you so much. Vice President and Regional Head of Tech Mahindra. Very interesting conversation. Thank you so much. Now let's shift gears and talk financials. Denmark's biggest bank says it's working hard to try to restore trust with customers and investors after finding itself at the centre of one of Europe's biggest ever money laundering scandals. Danske Bank says it may be facing material fines. That's after it admitted that much of about $230 billion that flowed through a tiny Estonian unit might need to be treated as suspicious. The lender's acting CEO says it's investing massively in compliance.
Danske Bank. Remember that this took place between 2007 and 2015. We have since then invested massively in our efforts to combat financial crime. So we have ramped up, so we are now more than 1,200 staff basically working on this every day. And we invest heavily in terms of IT, both in terms of monitoring and screening transactions. So we're in a completely different place today. But obviously, a big focus area for us is also to actually explain to the market in general that we are actually in a different place.
If you've invested so much and done such solid investigations, have you found any sanctioned individuals, or have you come up with any idea of who may be the ultimate beneficiaries from the UK limited partnerships and the Russian intermediaries here? I mean, have you made any progress?
We are making progress every day. There's no changes to the picture that we painted on the 19th September when we released our report.
Are you able to identify the individuals, though, or is it very difficult to get behind some of these UK limited partnerships and Russian intermediaries? How close are you to identifying the actual beneficiaries of these accounts?
We are working on that every day, and we're in dialogue with authorities around that, but I can't go into specifics around exactly how that is done.
All right, let's talk about the business side of the story then. How is your outlook for trading income, Jesper, for the rest of the year and for 2019?
We don't generally guide on trading income. We can see when we look at third quarter, though, that there's a little pickup compared to earlier in the year. We hope that will continue and that activities in that part of our activities will increase.
That's it for this week's episode of Bloomberg Markets Rules and Returns. If you have any questions or comments, you can email the team, as always, at rulesreturns@bloomberg.net. This is Bloomberg.